Friday, June 6, 2019. Um, the first thing about this week is to try to remain calm. You know, it helps to clear the mind before taking this stuff on. And I feel as though there's a lot of misinformation in the media and clouded minds among clients. And it's so crazy that I may be mistaken, but I'm going to try it out. The U.S. economy is okay. The job number that came out today, 75,000 new jobs in May, that's the kind of target that the Fed has been trying to hit for 5 years, worried about an overheating economy. There's no weakness there. There's no weakness in any reports received this week or last, or before that, or before that, or before that, which would justify a rate cut by the Fed. Now, the Fed meets on the 19th, 12 days hence. I'll be astounded if the Fed cuts on the 19th. And I'm going to be equally surprised if that does any harm to interest rates, which have fallen. I think rates have fallen for different reasons. The Fed may be forced to ease as the year wears on, but the upset in the world and the rates began to decline clear back November, December. Mortgage rates were 5.25. We came off a half a percentage point by April. It should. The rates were too high. The Fed itself misunderstood how high it might go in a cycle. But at the end of April, we started to go down again. The very end of April, at just the moment that tariff talks with China broke down. That caused an effect. A week ago, we took another big drop down all the way to 4. And that was synchronized with this Mexican tariff adventure. Cause and effect. On what theory a president who would like the Fed to cut its rate and the Fed will not? So the Fed creates an artificial and unnecessary economic emergency, which makes the Fed cut its rate, and then the president withdraws the emergency and the Fed leaves its rate down where it was or takes it back up. That's not the way this railroad works. The Fed absolutely would stand ready to rescue the economy if it's in trouble. But a circus of this kind, where there's nothing fundamentally wrong with the American economy, but international economic affairs are damaged by a one-man trade war, we'll see. There's another driver overseas, which is weakness overseas. The European Central Bank this week cut its forecast for economic growth in Europe, cut Germany's growth forecast to barely positive this year, and cut it almost in half for next year. China's economy, we can't trust any of the data, but what data there is says that it's slowing. Other economies in Asia are slowing. And there's a general global run of money that used to be at risk in stock markets to government bonds of all kinds, ours, Germans. The yield on a German 10-year government bond this week fell to a new all-time low. It's negative 0.25%. It's never done that before. And that was synchronized with another big substantial drop in U.S. Treasuries and mortgage rates. That's a pattern. That's a lot of money all over the world, either running to safety or, and this is a semi-political thought and I apologize, but the U.S. economic policy externally, U.S. foreign economic policy is so crazy, so variable, so one day this way, the next day this way, that my suspicion, and I can't call it more than that, but the evidence is strong that a hell of a lot of money around the world is saying, I've had enough, I'm out, I'm going to wait this guy out, I'm going to wait this set of policies out. And he may be re-elected next year, but in the meantime, I'm out. To the American consumer, home buyer, someone thinking of refinancing, yes, rates can go lower, but hold this thought. They already have gone lower. They're already down in anticipation of ugly things which may or may not happen. Don't bet on going lower. The Fed tends to respond in a trailing fashion. So a Fed rate cut, our rates might go up, not go down. They're already down. If a refi makes sense, do it. If buying a house makes sense, do that, based on the economics of the house and the local real estate market. Don't let all this furball of tariffs and Twitter and Mexico and China, don't let it, all the way back to where I began, remain calm. Don't get caught up in the policy furball, which is having an effect on big money, big corporations, but is not yet anywhere near Main Street. Main Street's fine. Have a good weekend.